All right. Good morning, everybody. Good morning, all you magnificent melon heads of the world. Happy Monday, everybody. The new week is upon us. Today is September 29th, 2025. It's going to be a big week. We got jobs data later this week. We got a government shutdown, EV tax credits going away, but I don't care about any of that right now. I just like the shiny once again this morning. We have got gold is making another all-time high. Silver is along for the ride. The metals just keep going up. And look, guys, as much as I love to see it, I've said this a couple times over the last few weeks. I'm a big gold bug. I own some gold. I own some silver. I own some mining stocks. I like what I see. It's very good for me personally. But this is not good for anyone. What's happening? Gold is not supposed to go up in a straight line. My God, this is a alarm bell blaring in our ears. And the whole market is just like, well, my AI stocks are doing fine. I don't care. Not supposed to happen. Gold hit $3,800, firmly above $3,800, both the spot price and the futures. We're actually steaming towards 3,900. We're going to be talking about $4,000. I don't know, by the end of this week. Who knows? Along those same lines, silver briefly touched $47 overnight. It's recovered a little bit here. We're kind of settling into this pattern where the spot price runs overnight. People start buying the gold in London. Then the futures opens up. People sell against that gold that they bought in London. They sell into the futures market here in the States. Mr. Slammy takes the price down a little bit more, and then we resume upward throughout the course of the day. I've watched that pattern play out a couple of times over the last few days. Probably going to get a repeat of that here. But look, guys, it's just not a good sign. I've said it before. I'm not sure I want to live in a world of $10,000 gold, but I'm pretty sure I don't have a choice, and that is exactly what's going to happen here. In case in point, we have yet another circus is brewing in Washington, D.C., and it is a circus of many clowns, both R and L. We're going to shut down the government, and it's tomorrow at midnight or Wednesday morning is when the government shutdown happens. I thought it was like weeks away. I mean, the whole world doesn't even really see this one coming. Everybody's like, oh, yeah, the government shut down. They do that every year. Is it that time of year again? Are we just going to declare like a national holiday, government shutdown day? Since we do it a few times a year anyway, we could all like gather around the fireplace and exchange gifts and share stories about government shutdowns when we were kids. I don't know. It just seems like something of a tradition. It sure as heck never fix any of the problems. I mean, I don't even really know. I mean, I suspect I know what it's about. One side wants to spend more money. The other side pretends to not want to spend more money, even though they just want to spend more money on other stuff that they want. Case in point here, they're going to spend more money. The debt problem is going to get worse. And how are they going to pay for it? With dollar debasement. And then you look over at gold going up every day and you're like, yeah, I think I see what's happening here. Matter of fact, the whole world can see it. Negative real rates is here for the foreseeable future. The only way the government can continue to do what it's doing is by endlessly debasing the currency so that the interest rate being paid on that debt is less than the rate that debt is losing value. In other words, U.S. Treasury bonds are a bad investment for the foreseeable future, which means you better own some gold. And that is exactly what the whole world is doing. Meanwhile, we got this whole AI bubble going on over here. And Treasury bonds, the typical safe haven where people go when something bad happens in stocks, is not really a viable play now. So who knows what gold's going to do if and when the tech bubble ever goes up. Speaking of the tech bubble, we've got some very interesting things going on here this morning. Electronic Arts, EA, the maker of video games, they are going private in the largest leverage buyout in history. Silver Lake Management, that's the private equity firm, is taking them private, along with Saudi Arabia's Public Investment Fund and Jared Kushner's Affinity Partners, that's the president's son-in-law. They're buying Electronic Arts for $55 billion or $210 a share in a deal that is drawing comparisons to the AOL-Time Warner merger that marked the high point just before the dot-com bubble burst. Any comparisons to the AI bubble are purely coincidental. Now, look, Electronic Arts is like one of the most hated companies in America. People who buy their product hate this company with a passion. It's kind of funny if you read some of the posts on Reddit, what people think of EA Games. And then keep in mind that now a private equity firm is going to buy the company. Okay, It's probably not going to make things better for the customer experience at Electronic Arts. Yeah, so that's going on this morning. That's pretty crazy. By the way, there was a lot of call buying in Electronic Arts on Friday before anybody knew anything about this. Somebody had insider information, made a huge leverage bet on Electronic Arts, and they're making stupid bank off that bet now. Insider trading fraud remains rampant in this market. The British government is making a $2 billion loan guarantee to Jaguar Land Rover so that they can restart production after a cyber attack. And I'm going to use my Dr. Evil air quotes here, the cyber attack. Yes, the cyber attack took down Jaguar Land Rover. It definitely wasn't the Crayola rebrand that sank their sales by 97%. Yeah, okay, it was a cyber attack, wink, wink. That's why they need a loan guarantee. The government is basically bailing out Jaguar Land Rover after their reboot torpedoed their sales by 97%. Unless, I guess, the British government expects the world to believe that a loan fixes a hack. All right? My computer's not working. I'm banging on the keyboard. Quick, let me call the bank and get a loan so this works. Or do I call IT to fix the hack? Why does a loan suddenly make the system start working again? Maybe it's the fact that the British government is going to try to support Jaguar Land Rover, basically nationalizing the company, I don't know, or at least corporate welfare to try to keep them alive. And then hopefully people might forget about what happened and start buying Jaguar again. I don't know what they're thinking over there. Just got to defend woke companies, I guess. Deutsche Bank. I love this note from Deutsche Bank. Came out late Friday. I was talking about this one over the weekend. They say the AI bubble is the only thing standing between the United States and a recession. You don't say. Gee, if only somebody had been warning about this for 2 freaking years. And they also say that the current parabolic pace of spending on AI infrastructure is not sustainable. Wow. If only somebody had been warning about this. I'm shocked. It's amazing. What a groundbreaking piece of original thinking by Deutsche Bank. Definitely didn't hear that here 2 years before Deutsche Bank came home. What are they paying these analysts, by the way? What does an analyst at Deutsche Bank take home? He's probably doing pretty well. And all I'm saying is I had the same shit 2 years ago. I just throw them out there, guys. Anyways, Eric Adams is dropping out of the New York mayoral race. Keep your eye on that one, guys. That may spill over into financial news in a big way. I mean, there's basically a radical Islamic socialist communist is going to take over mayor of the financial capital of the world. That's not going to be a good thing. One thing in particular, keep an eye on New York real estate. He's talking about rolling out rent controls for the whole freaking city, freezing rents. If that happens, you will see bank failures because of that. Case in point, look at what happened to New York Community Bank. They almost went under because of rent-controlled apartment buildings in New York City. And if a socialist takes over as mayor of New York City, that problem is only going to get a lot worse. So New York Community Bank is now known as Flagstar Financial. They still have all the same underlying problems on their balance sheet. They just got $1 billion from Steve Mnuchin to try to bail them out. Case in point, also, Veritas Investments defaulted on a $652 million loan tied to 66 buildings in San Francisco. That's basically the rest of their holdings. It's the largest landlord in San Francisco. It's like their third default this year. Where are all of the losses in commercial real estate? I don't understand this. Hundreds of millions, billions of dollars in loans defaulting on a daily basis, and yet it hasn't shown up in any price discovery on any of the debt instruments or any of the stocks that are underlying this bubble. Where are all of these losses hiding? We all know the answer somewhere in our retirement accounts. I can't point to the specific fund or the specific stock that it's hiding in, but the only way to hide losses that big is either the government or people's retirement plans. We got the Pentagon wants to double missile production. We got an article in the Wall Street Journal about that one this morning. And the defense contractors are channeling Henry Hill, and they're just basically saying, oh, you want twice as many missiles? F you, pay me. That's pretty much the refrain from the Defense Department. See, also government shutdown over everybody wants to spend more money. They're just fighting about what to spend it on. Kind of the same thing there. And in our latest warning about the private asset industry, private credit and private equity, we've got a story about a new $300 million continuation vehicle from one of India's largest private equity firms. But there's one little tidbit about this deal that really stinks. Just makes no sense unless you factor in that somebody is paying with somebody else's money. As always, guys, a warning that they are looking to park this garbage in your retirement account. Don't let them do it, but you got to stick around to the end of the show for that one. Why don't we shrink my big melon of a head and let's see what's going on in markets this morning. And as always, don't forget that like button. You new guys, hit that subscribe button that's right next to it so you can come back and have your coffee with the melon heads, because we do this every single morning. And right now, the S&P 500 is up by 0.5%, 35 points to the upside. We've got the Dow is also up this morning, about 214 points, just shy of 0.5% higher this morning. And the NASDAQ is up almost 0.2%, 163 points higher. Stocks are up across the board. Everything is going up in value. Why? Probably because the dollar is going down in value. The DXY is at 97.87, off by another 28 basis points. A weaker dollar will be putting upward pressure on asset prices this morning. Looking over at the bond market, we got yields are a little bit lower this morning, especially on the long end of the yield curve. The 30-year Treasury is at 4.732. That's off by 3 points and change. The 10-year is at 4.166. That's down by almost 2 points. The 2-year is at 3.643, off by about 0.5 point. And the 1 month is down by a fraction of a point at 4.132. So yields lower pretty much across the board here. Looking over at the commodities board, there is the shiny outperforming once again. Spot gold, $3,817 this morning. That is higher by $57 or 1.5 points for the upside. That's your London spot price. And we've also got your COMEX New York prices rising, 38.47 for that front month December gold contract. That's higher by 38 points or 1%. Gold is looking good this morning, and silver is nipping at its heels as well. We've got spot silver, $46.71. Overnight, spot silver hit a high of $47.18. We are on a fast track to 50, guys. As always, what happens at 50? That's the big question. I don't know. Nobody knows. Anybody who tells you they know is really just guessing and hoping they're right. But $50 is coming up fast here, higher by 67 cents this morning, or 1.5%. And that front month contract as well is higher this morning, 46.83 for December silver futures, hitting a high overnight of 47.39. Copper is higher by about 0.75% this morning. Look at platinum as well, guys. Platinum is ripping here also. 16.24 for January platinum futures, higher by another $20 or 1.25%. Shout out to my man Bob Coleman. He was on the channel about a week and a half, 2 weeks ago. Made another good call on platinum. Bob has been right on the mark for the last 2 years here. Palladium, meanwhile, is a little bit lower this morning, down by about $26 or 2%. And crude oil is also in the red, off by 2.4% or $1.59 lower, 64.14 for November WTI futures. One quick one on the gold front, guys. We saw this one this morning. This is pretty unusual, and I know we got a lot of guys in mining stocks that follow this channel. So heads up, you Barrick shareholders. I don't know what's going on here. There's almost no details in this article, but Barrick CEO Mark Bristow has abruptly departed, and they've named an interim CEO in his place. CEOs abruptly leaving a company, never a good sign. Doesn't necessarily mean something bad here. Maybe the guy's health is failing or something. We don't know. But anytime you see a sudden departure of a CEO, maybe their hedges blew up. They've been having trouble with governments and mines being taken over and things like that. Just be careful here, guys, with this one. Again, Barrick probably going to be okay as the underlying metals are rising, but abrupt departure of a CEO is something to keep an eye on. Right now, the stock is up 2%, along with the entire mining sector here, 35.17 for Barrick shares. You can see it did sell off a little bit earlier this morning on that sudden CEO departure, but it looks like the market bought the dip. Looking at Bitcoin this morning, having a slightly better morning here, $112,211 as priced on Coinbase. Bitcoin had a good weekend. We hit a low of around 100. We were below 109,000 at one point on Friday, but the buyers showed up over the weekend here. Guys, we are now 75 weeks since the halving. We are now in our 76th week since the halving. Again, crypto winter just around the corner here. A lot of people are swearing this time is different. Where have I heard that before besides freaking everywhere? Just be careful on leverage with Bitcoin, guys. That remains the warning as it has been for some time. This is the big one this morning here. Expectations for Trump summit are low before the shutdown deadline. They're having a meeting today. President Trump is getting together with congressional leaders. In my opinion, it's just a puppet show. I think both sides are dug in and they are committed to this shutdown. And I think it's just going to happen here. The last time we were in this situation, Chuck Schumer kind of acquiesced and he took a lot of heat from his base over that. And so he's under a lot of pressure from his side to do the shutdown. The Republicans are always down for a shutdown the government party as well. So I don't expect anything to come out of this meeting. Here's the one thing I would mention. Democrats want to spend $350 billion to permanently extend Obamacare tax credits to middle-class families to avoid a premium spike on January 1st. A couple things I could say about that $350 billion, that was COVID stimulus. Extending COVID stimulus is freaking stupid. Also, that being said, according to our government BLS CPI calculation, healthcare premiums are down double-digit % year over year. So why are we so worried about a big spike? Oh, that's right, because government inflation statistics are complete horse manure, and they've been lying to us about inflation all along. I just figured I'd point those out. Democrats also want the bill to repeal Medicaid cuts that were made in the Trump tax bill, including new work requirements and a crackdown on an accounting gimmick that has allowed states to increase their Medicaid reimbursement rates. They also want to reverse cuts to medical research and block the White House from rescinding previously enacted appropriations. I want. At the end of the day, guys, they're going to end up spending more money, right? We don't know what the final version of this is going to look like, but they're going to shut down the government. There's going to be a parade of articles about this person's not getting paid. These people aren't being paid. This sob story about this government program that's been put on freeze, and here's the human input. At the end of the day, we know the government is spending trillions of dollars more than it has. It's got to stop, but they're not going to stop it. They're going to make it worse, and that's why gold is making a new high every single freaking day. And that's why I like the shiny. EA agrees to a $55 billion sale in the largest leveraged buyout on record. Possibly another sign of a top here. Electronic Arts agreed to sell to a group of private investors in a deal that values the company at $55 billion, the largest leveraged buyout on record, which means they're borrowing money to take the company private. The consortium, which includes Silver Lake Management, Saudi Arabia's public investment fund, and Jared Kushner's Affinity Partners, agreed to pay $210 per share in cash for the Redwood, California-based company, according to a statement on Monday. That represents a 25% premium to where its shares traded before the talks leaked on Friday. Let's see. The transaction, which includes $20 billion in debt financing from JP Morgan Chase, also shows Wall Street's appetite for game-changing mergers under the deal-friendly Trump administration, despite recession fears and geopolitical concerns impacting the broader economy. And just for shits and giggles this morning, I went into, this is Google's little AI answer, and I said, do people hate Electronic Arts? That was the question I asked. And here's the answer that Google came back with. Now, keep in mind, these large language models are all trained on Reddit data, so this is what people are saying on Reddit about Electronic Arts. They say, yes, many gamers and critics hate Electronic Arts due to longstanding criticisms, including anti-consumer practices like microtransactions and loot boxes, acquiring and shutting down beloved studios, releasing unfinished games, and a perceived focus on profit over player experience. These issues led EA to being voted the worst company in America twice and fueled extensive backlash, though the company remains highly profitable. And, well, if you love that, just wait till private equity gets done with it. That's all I can tell you. Private equity is not known for enhancing your customer experience. And when it's already this good, oofta, as Mish would say. Electronic Arts stock is ripping this morning. Let's refresh this and get an accurate mark. $203.42, up $10 or 5.25%. And I would note that the stock was already up almost 15% on Friday. Somebody got wind of this deal before it was announced, and somebody made a lot of money off of that. Meanwhile, Britain pledges a $2 billion loan guarantee for Jaguar Land Rover. Gotta love this story. Britain will back Jaguar Land Rover with a 1.5 billion pound, that's about $2 billion US, loan guarantee to help support its supply chain in the wake of the luxury car maker's production shutdown following a cyber attack. Oh, yeah, it was a cyber attack that took down Jaguar. Jaguar Land Rover shutdown has lasted nearly a month, and the government had been exploring options to support the company and its supply chain. Why? Why does the government need to support the company? But I digress. With some small suppliers saying they had 1 week left at most before they ran out of cash, car industry keeps getting worse. The business ministry said that the loan would be privately financed and guaranteed by Britain's export credit agency, the UK Export Finance, and was expected to unlock 1.5 billion pounds of support for the car maker's supply chain. So yeah, it was a hack that took down Jaguar Land Rover, and a police sketch artist has released this sketch of the suspected hackers that took down Jaguar. Yes, it was a box of crayons that took down Jaguar Land Rover. Yeah, guys, after they ran this rebrand, remember that whole copy nothing ad? It was like 40 seconds of these colorful people spray painting walls, and there was the hammer, like a little throwback to the Apple ad from 1984. No cars in that car commercial. You think you're trying to sell cars, you might, I don't know, have a car in the commercial. Jaguar Land Rover sales dropped by 97% after they ran this ad. Oh yeah, sure, it was a hack that took down the company. That's why they needed a loan. Definitely had nothing to do. Like, look at this. What is that? Is that Pac-Man on her head there? And then what's this? The lead singer from Midnight Oil sitting there. And then we got Maxine Headroom over here. And this looks like an androgynous version of Bill Nighy on the left-hand side here. Go figure. People don't want to be seen driving a car represented by this ad. Just amazing turn of events. I'm just shocked. Anyway, Deutsche Bank notices that the needle is getting dangerously close to the AI bubble. And I tweeted out over the weekend, nobody saw this coming. And that is just another case for this. It's not for, if not for AI spending, the bank says the U.S. would be in a recession. I just freaking love this story. What are they paying these analysts to say what I said 2 years ago? Money seems to endlessly flow in the AI space, whether it's NVIDIA announcing a $100 billion investment in OpenAI or OpenAI planning to build more massive data centers before the first $500 billion project is even completed. Eventually, some of the folks who have poured money into these ventures are going to expect to see some return on investment. That's according to a research note from Deutsche Bank. It's getting harder and harder to see how that's going to happen. Fortune reports that a note written by George Saravellos of Deutsche Bank warned that spending in the AI sector is parabolic. In fact, it's so vast that the researchers said that it might single-handedly be propping up the American economy. AI machines, in quite a literal sense, appear to be saving the U.S. economy right now. In the absence of tech-related spending, the U.S. would be close to or in a recession this year. That checks out. Earlier this year, the Wall Street Journal reported that capital expenditure spending for AI contributed more to growth in the U.S. economy than all consumer spending combined so far this year. Now, you don't really have to be an economist to know that it's usually a bad idea to have all your eggs in one basket. But just in case, here's one to tell us. Torsten Slok, the chief economist and asset manager firm Apollo, wrote last week that the bottom line is, once again, that there is an extreme degree of concentration in the S&P 500, and equity investors are dramatically overexposed to AI. To put some numbers to it, here's some math from a recent report published by consulting firm Bain & Company. The firm says that AI's compute demand grows at more than twice the rate of Moore's law, and by 2030, the computing power needed to satisfy AI demand would come at a cost of $2 trillion, Dr. Evil's pinky there, $2 trillion per year. The world is still $800 billion short to keep pace with this demand. Pair that with the report that came out of MIT earlier this year that found that just 5% of businesses that have adopted generative AI tools have managed to achieve rapid revenue acceleration, while the rest have largely fallen flat. And it becomes a little hard to see the case for profitability being just around the corner. But hey, who knows? Maybe we're just another small $500 billion investment away from making it all click. Any takers? Who wants to be the next $500 billion loan? Guys, we all know this bubble is going to burst. At this point, there's just people that are still buying the stocks thinking they can find some bag holder at a higher price to buy it from them. It's coming. We all know it's coming. Meanwhile, Eric Adams drops out of New York City's mayoral race. Guys, the one thing I'm going to point out to here, I don't want to get too much into politics, but you've got a socialist is like an 83% probability of taking over New York City, and he's promising government-run grocery stores and rent controls citywide. All right, this will have profound financial consequences. All right, this is the financial capital of the world. There's definitely, in my opinion, there will be bank failures over what Mamdani is going to do to New York City. And case in point, look what happened here. San Francisco housing giant Veritas defaults on $652 million in debt. 66 buildings now face foreclosure. When the government makes it so that people can stop paying their rent and there are no consequences, landlords go out of business. That's what's happening in San Francisco. And that's what's going to happen in New York City. Veritas Investments, the real estate giant that owns thousands of housing units across the West Coast, has defaulted on a $652 million debt and is facing the foreclosure of 66 buildings in San Francisco, according to a September 18th default notice. That may represent the entire San Francisco housing stock of what was once the city's largest landlord. A separate September 18th filing with the city describes the 66 buildings as the Veritas SF portfolio. Those 66 buildings house 1,566 units, according to the review of records in the San Francisco office of the assessor recorder. The notice of default was sent by First American Title Insurance Company to 66 properties owned by various LLC subsidiaries of Veritas. It gives Veritas until 5 days before a sale date to pay off its debt to the lender, RBC Real Estate, the real estate investment arm of Royal Bank of Canada, and get into good standing. In other words, they have a couple of days to try to extend and pretend. Otherwise, they're going to foreclose on the loan. The notice gives Veritas the option to work out a payment plan or ask for extra time. If it doesn't do either of those things, a sale date may be set no sooner than 90 days from the September 18th filing. Now, guys, usually they do end up extending and pretending these loans because the lenders don't want to take the buildings back because then they have to sell them and then find out what they're actually worth, which is probably going to be a very disappointing answer. But look, guys, this is pretty crazy because look at some of these defaults that Veritas has had earlier this year. It defaulted on a $1 billion loan in late 2023 and subsequently sold chunks of its real estate empire. In January of 2024, it sold 2,150 units, reportedly a third of their San Francisco housing stock, for $464 million. Last year, it sold another 762 rent-controlled units. This March, it sold 1,770 units for $540 million. Earlier this year, Veritas defaulted on a separate $450 million loan, according to real estate news site The Real Deal. After the 2024 sales, Veritas was dethroned as San Francisco's largest landlord. Its CEO saw the irony at the time. He founded Veritas in 2007 after the housing crisis and made his mark by buying foreclosed upon properties. So the largest landlord in San Francisco defaulting on more debt. It's like the third or fourth time they've done it. There's a fire sale in commercial real estate, and yet everybody's like, oh, the bottom has been in. I mean, we've seen a bottom in commercial real estate every day for like 3 years now. Amazing. I guess the bottom is finally in again. Meanwhile, the Pentagon pushes to double missile production for potential China conflict. Pay attention to this one, guys. Industrial production of munitions is a major weakness for the U.S. military. The conflict in Ukraine, the conflict in the Red Sea have laid this shortcomings bare. And the military is trying to fix the problem, but the defense contractors, they want to be paid. The Pentagon, alarmed at the low weapon stockpiles the U.S. would have on hand for a potential future conflict with China, is urging its missile suppliers to double or even quadruple production rates on a breakneck schedule. The push to speed production of the critical weapons as the highest demand has played out through a series of high-level meetings between Pentagon leaders and senior representatives from several U.S. missile makers. That's according to people familiar with the matter, of course. Deputy Defense Secretary Steve Feinberg is taking an unusually hands-on role in the effort called the Munitions Acceleration Council and calls some company executives weekly to discuss it, some of the people said. The department summoned top missile suppliers to a June roundtable at the Pentagon to kick off the industry effort. The meeting, attended by Defense Secretary Pete Hegseth and General Dan Kane, the chairman of the Joint Chiefs of Staff, drew executives from several weapons makers, new market entrants like Anduril Industries, and a handful of suppliers of important parts like rocket propellant and batteries. Now, they're showing some of the missiles here, like the THAAD interceptors, the Standard Missile 6, that's the Navy's advanced surface-to-air missile, can also be used for anti-ships. The PAC-3, that's the Patriot missile. The Precision Strike Missile, or the PRISM, that's the replacement for the ATACMS that's fired from the HIMARS system. And then you've got the Joint Air Surface Standoff Missile, or the JASM, the LRASM, its anti-ship variant. Those are the stealth missiles that are kind of like replacements for the Tomahawk cruise missiles. These are all the modern missile systems that are highly advanced, highly effective, but very expensive and hard to make. Companies don't build these things on spec, said Tom Karakau, a munitions expert at the Center for Strategic and International Studies. You wait for the government to put them on contract. There needs to be an expression of support with money. It can't just be words. Defense contractors like Lockheed Martin and Raytheon say they have responded by adding workers, widening factory floors, and growing spare parts inventories to prepare for a potential demand surge. But some suppliers have struggled to hit the new targets and are weary of splurging on orders that the government has yet to fund. Christopher Kallio, the chairman and CEO of Raytheon parent RTX, one of the military's largest munitions producers, said in a July 3rd letter to the Pentagon that it was ready to work with the Defense Department to increase production, but cautioned that the company would need additional money and commitments from the Pentagon to buy more munitions. In other words, F you, pay me. You want more missiles, pay for them. They're not just going to magically appear. That's hard to do when the government is shutting down, overspending, and when you already have a spending problem. See also gold. Guys, there's no way to pay for World War III other than currency debasement. There's just not enough gold in the whole freaking world. And the last one of the day, guys, every day we're going to dedicate just a little bit of time to warn you about what is coming in private credit. And I saw this one. Now, this company, I don't care about this company. It's not that big of a deal, but there's one little facet of this deal that just blew my mind that I just had to talk to you guys about. Kidara Capital raises $300 million continuation fund for assets. Now, it's important to keep in mind what a continuation fund is. A continuation fund is a new bowl, all right? Private equity, they buy these companies and they put them in a bowl and they call it a fund. And then typically they take those companies public or they sell them to somebody else at a profit, and then they pay back the people who put money in the bowl. That's how private equity makes money. But right now, these holding companies that are in the bowl aren't worth anything. They can't sell them, or they won't have enough money to pay back their investors if they do sell them. So what they're doing is they've come up with a new bowl, and they're asking people to put money in the new bowl. And then they're taking the money in the new bowl and they're using it to pay the investors from the first bowl, and they're putting the companies from the first bowl into the second bowl, and they're calling it a continuation fund. All right, that's all it is. It's a Ponzi scheme, paying back old investors with new investors' money. But here's the thing. It's what the price that they raised this money at. Kidara Capital Investment Management, one of India's largest local private equity firms, has closed its first continuation vehicle at $300 million. People familiar with the matter said the continuation fund was priced at more than the net asset value of the previous fund that held the companies, the people said. Kidara Capital didn't respond to emailed requests for comment. They sold this crap to a continuation fund at a higher price than they were holding it in the old fund. Keep in mind, guys, the reason for a continuation fund in the first place is because these assets are illiquid and you can't sell them for enough money in order to pay back your old investors. But apparently they will sell them to new investors at an even higher price. The only possible explanation for this is that the new investors have no idea they're even doing this, that this is other people's money is being used. Whoever put money into this continuation fund was not paying attention to the price they were paying. There was no price discovery. In other words, this is probably somebody's passive retirement account that's doing this. Otherwise, why even have a continuation fund to begin with? If you can get more than net asset value, just take it public, just sell it to somebody else. Why do a continuation vehicle at all? Something here stinks. I mean, like month-old fish that was at the bottom of the refrigerator in a puddle of like mucus stinks. Something just stinks to high heaven about this deal. Good God, what are they doing? Guys, this is happening all over the industry. The reason why credit spreads are getting so low right now is because people are chasing yield, overpaying for garbage debt. And I suspect stuff like this is being snuck into 401ks and IRAs all over the country. Know what you hold. Open up the prospectus. Read what's in these funds. And I just want to say thank you very much to Big Mouth Barry. What's going on, Big Mouth? He says, if crypto winter is here, how many weeks before it ends? History shows Rocktober solid for Bitcoin. Thanks for all you do. Look, I don't go by the September is always a bad month for crypto, and then October is a good month for crypto. Those kind of correlations, they sound great, and they work right until they don't. I'm not too worried about historically October is great and sell in May and beware the Ides of March. There's a slogan for every month. All right. Why do I think crypto winter is here? Because we are following a FOMO cycle. That the halving cycle creates FOMO and the psychology of a bubble. And the prior few iterations have failed at 75 to 77 weeks. It's not a diehard drop dead date. It's just a number that has repeated itself often enough that I am wary of it. And I look around at these shitcoin treasury companies, and it is just so ridiculously fraudulent what's happening in that space. It is obvious somebody out there is going to fail at some point, and a lot of people are going to get wiped out when that failure happens, a la FTX, a la OneCoin, BitConnect, Mt. Gox. Something else is going to happen. I don't know what it is. Maybe it's going to be strategy or MicroStrategy. Maybe it's going to be these fart coin holding companies. I don't know exactly. I can tell you Bitcoin has had one hell of a run. It's been about 18 months, 75 weeks since the halving. Historically, that is when the burst happens. I am taking profits here. I still own some Bitcoin in case it goes higher, and it could go higher. I'm not saying it won't go higher. I'm just saying we are due here, guys. We are so due for a crash. And keep in mind, crypto tends to track with the NASDAQ, tends to. It's not a one-for-one correlation. But if we are going to see a bubble burst in the AI space, it will drag crypto down. Or vice versa, crypto could drag the AI space down. One could affect the other. Both are so due. So that's why I think. Now, how many weeks before it ends? Correct me if I'm wrong, but I believe it's typically about 75 weeks before the next halving that the bottom is in, or about a year and a half after. But crypto winter usually lasts about 2 years before the next halving. There's a run up ahead of the halving, and then a few months after the next halving, you get another parabolic move, rinse, repeat. And it's also worth pointing out that these cycles are getting less and less profound. With each subsequent halving cycle, the run up and the crash are getting smaller and smaller on a percentage basis, though still very big. Thank you very much, Big Mouth Barry, for supporting the channel. Gordon Guanu, thank you, sir. He says, not feeling aggravated by silver price movement. I see what you did there with the chemical symbol for silver. Thank you, Gordon Guano. I like the shiny. Look, I'm not aggravated either. I bought metal because, number one, I didn't want to play in the casino because I don't trust the lack of price discovery. I think something terrible is going to happen in equities. And number two, I think silver is the most undervalued asset in the world. And even after this massive run, silver is still massively undervalued. Case in point, it still hasn't taken out its 2011 high. So silver could run dozens, tens of dollars higher. Silver could run to $100 and still be relatively fairly valued versus what gold has done. So, no, yeah, I'm not aggravated. I'm just aggravated by what a mess it is. You know, most people don't own gold and silver, so most people have no protection against what's happening here. I mean, if you own any physical silver and gold, you are the 1%. And if you own more than a few ounces of either, then you're like the 0.1%. Most people have no gold or silver whatsoever. Everything they own is in the market being entrusted to these just unbelievable dirtbags in the financial industry. I don't know how else to call it. So it's good to have a little bit on the side. Let's just put it that way. Thank you, Gordon Guanu, for supporting the channel. Charles G says, apparently we are giving Argentina a bailout too, up to 20 billion. Was it 20 billion? I don't recall the number, but yes, they're talking about doing an FX swap or a currency swap with the Bank of Argentina, which basically means you deposit Argentine pesos at the Federal Reserve or the Treasury, and we'll deposit dollars at your bank. It is absolutely a bailout of Argentina. That's exactly what it is. The Argentine peso is collapsing. It is largely collapsing because the Peronists are threatening to retake control. And if Javier Milei loses control and the Peronists take over again, what's the first thing they're going to do? They're going to spin up the money printer and continue to devalue the peso. So Milei is hanging by a thread here. Let's put it that way. And Besson has decided he wants to bail him out. And let's be honest, currency swaps, they're not technically money printing, but they kind of are. More dollars in circulation. And the whole point is to prop up the peso against the dollar. Another way to put that is to debase the dollar against the peso, or at least put downward pressure on the dollar versus the peso. So, yeah, I think that's worth looking into what we're doing with Argentina. I get why they're doing it. Look, they're trying to prop up the one libertarian leader in the world ever. And right now he's on shaky ground. Thank you, Charles G., for supporting the channel. Madison Hype says that last story is spooky. Thanks for the show. You are most welcome, Madison. Thank you so much for supporting the channel. And I know, guys, like I'm getting a little repetitive with these private equity warnings. But, you know, just in the off chance there's somebody new who is coming along here, I think most people who just go to work, put in their time, collect their paycheck, automatically send 4-6% into their 401k, and then trust people to have their best interests at heart. I think the average person who does that and doesn't watch the news all day has no idea what Wall Street is trying to do to his 401k. All right. They are absolutely going after your retirements, guys. Wall Street. All right. Let's just say we're going to get a little profane here. Earmuffs, everybody. Wall Street fucked up and they want you to pay for it. All right. That's what they're doing to 401ks. That's what they're doing with private equity. These people are locusts. They are strip miners. They have destroyed value all over the country. Now the bill is coming due. They've paid themselves dividends and they're trying to cash out and park that shit in your account before the bubble bursts. And just make sure whoever is managing your money knows that you don't want anything to do with that. Thank you very much, Madison. I apologize for the profanity, guys, but this stuff does kind of get under my skin sometimes. You probably noticed that. I know. I probably just got my channel in all kinds of trouble. But, oh, well. Sorry, guys. Anyways, thank you, everybody, for having your coffee with the Melonheads this morning. I appreciate all those super chats, guys. Thank you for the generosity. Also, don't forget that like button and that subscribe button on the way out for the YouTube algorithm, should you feel so inclined. Thank you to my Patreon supporters and my magnanimous Melonhead members on YouTube. Links down below, should you feel so inclined. Hi, Mom. Hi, Dad. Love you guys. Everybody, till next time, live small and dream big.